Ladies and gentlemen, boys and girls, there's only one question on everyone's mind. Which direction is Bitcoin going to go next? Will it plummet to the downside like it's been doing for the past 1, 2+ years, leaving kids crying in the streets? And me personally just bored. Will it grind sideways like we're witnessing here, as it also has done for the past 6 months to a year? Or will it potentially do the unthinkable, the unimaginable, something that no one expects, and maybe actually begin somewhat of a sustained move to, shall we dare say it, the upside, to the moon? Hello there, my friends, and welcome back to another episode of TA with MK. My name remains to be just that, which is MK. And in today's episode, we're going to give you guys a quick update on the Bitcoin price, some short-term ideas, coupled with some ideas on the S&P 500 as we go into the weekend, which typically is boring price action. But right now, as Bitcoin's consolidating, boring price action could actually be bullish. Although, we'll still talk about some of the ideas or follow up on some of that is we talked about in yesterday's video, areas to watch for as far as downside moves or potential downside moves, and kind of where I'd be watching as the key level or area for any sort of an upside move. And if that sounds interesting to you guys, as always, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Alright, so the first thing I want to take a quick look at here is the 1 hour chart for Bitcoin, just kind of some short-term price action as we're still kind of consolidating, sideways to a degree above that breakout that we had, of course, which really was back here initially at about 18,300. Between 18,003 and 18,500. Of course, then we consolidated a bit below the next area of resistance, which was basically 19K. And that really was where the breakout was. In fact, if we turn my volume back on, which is off at the moment, one thing that I always look for is what were the areas where the most volume came in to tell us where the strongest areas of interest would be. In this case, if you look down here on my screen, I know it's kind of hard to see because I got a bunch of crap in the way, but you see this big volume spike candle. It just means a lot of buyers and sellers, both were waiting at that area. Clearly the buyers outweighed the sellers because you saw this break above 19,000 and a run all the way up to about, 21,300. Now, the main reason why that is important, at least to take note of, is if we have, any sort of a breakdown, that would kind of be the area, the area or areas that you'd be looking for, support at this point. You can see the volume spike down here. If my head's not in the way, that was the retest of around 18,000, which of course was that level we talked about as far as a breakout. Then of course you had the big volume candle that we just spoke about that really came in. If you look right where it's actually at, it really is the break of about 20K. 19,800 being the previous bull market cycle top from 2017/2018, right? And so that would be the area on any short-term pullback that would be kind of the first line in the sand, so to speak. I know that's not really the best terminology, but it would be the line that you would be paying attention to, right? I know it's not a specific line, it's more of an area. But here on the 1 hour chart, you can see as we're consolidating sideways, we had a bit of a rising channel going here. That did break down. Right now it's kind of consolidating back up, trying to retest it. And I spoke about this in yesterday's video, not on the 1 hour time frame, but just the idea that in the short term, either a consolidation period or a pullback would make the most sense. Now, I also mentioned, of course, anything could happen. It could easily break higher, and off we go. And I even gave targets, which we'll also talk about in this video. But the biggest thing that I was looking for is if we got a breakdown, which we did, of this smaller time frame pattern, that is, where would we be looking for potentially new entries? Well, lo and behold, the measured move for this breakdown is just over 20K, which is, psychological number. It's just above the 19,800, which is the true, support level. So you kind of have a zone that, we can mark on the chart. That being the upper end, I would say this 19,000, probably 700 to 800 being the lower end. So you kind of have this entire zone right here. We'll switch it to green real quick on my chart. That would be the area of interest, number one. for a pullback. Now, if we were to lose that level, would I be, thinking that we're headed back to 15K? Not necessarily. However, I think 19,000, and once we zoom out in a minute, does need to hold, especially about 18,650, in order for us to remain midterm bullish. Now, of course, to be short-term bullish, we don't want to lose 20K. But if we do, and you're looking to kind of scoop up some more midterm holds, the next area of interest you'd be looking for is for about 19,000 to hold, which will make more sense once we zoom out. But I just wanted to mention this is kind of the first area in the short term that I would be watching. If this winds up just being a bearish retest of kind of this area, the underside of this pattern, this previous area that we've been getting kind of rejected at, we'll just call it, 21,300. If we're not able to flip that in the short term, and especially if we're not able to take out these highs, which is around 21,650 that I spoke about in last night's video, and then at that point, these targets become more of a reality in that sense, rather than just a hypothetical. And at that point, this would be kind of the target one we'd be looking for to possibly, see what price action does at that point. If it comes down and retests, kind of consolidates, we might start looking for potential ideas of a bounce. Of course, if we lose that level, again, 19,000 would be the next area I'd be watching. Now, as we zoom out to the daily, it can make a little more sense, kind of what Bitcoin's up against as far as overhead resistance. You have this area that I've marked in red on my chart, which you can see was key resistance not once, but twice. Then it was support after it had broke above it. It lost it here on this bit of a capitulation candle. It became the resistance area. This was a bit of a bull trap. That's a different topic for a different video, but more or less you had volume, increasing with price action decreasing, which just means that the volume was supporting the direction of the move, which means that you get this little move to the upside. The overall volume coming into it were more sellers than buyers, so the likelihood of a fake out was there. Doesn't mean that I would have predicted it 100% by any means, because volume was coming in, but often you need to look at what volume's been doing leading into a move, and if the direction that the move is going, whether that's up or down, is being supported by volume increasing. So the flip side of that, let's just say price action was going up and volume was going up. Well, that just means that the strength of the move, which in that case is to the upside, is kind of validated. It means that buyers are stepping in with each small pullback. They're stepping in and increasing volume, increasing volume, increasing volume. So these are the kind of things, the ideas, I guess, that at least that I personally watch for to try to avoid being caught in what are called bull traps, bear traps, fake outs. A lot of different terms for it, but anyway, back to the topic at hand. So this was a bit of a bull trap or a fake out because the volume, of course, was supported by this downside move. And then you kind of ranged around here, and again, this key area we tried to break out in early November, resistance, big capitulation candle. That's actually the biggest candle we've had, in quite some time. Maybe even, at least on a daily, this is the biggest candle we've had in the past several years, right? So fast forward to current price action, and lo and behold, where are we again? We are below that major resistance. It's very, very common for price action to get rejected on its first attempt at, resistance in this case. Question is, do we consolidate a little bit more like we talked about on the lower time frame and then break higher, or do we see a bit of a pullback potentially, to see if buyers step in? The reason why that's important to me if we do get the pullback is, again, we're trying to reverse what's been a very major downtrend, right? You can see we've had this low, then we followed it with this high. As price action pushed lower, you had a lower low, right? Lower low. Price action so far is still putting in a lower high, which means that there's potential for the next move to come clear down here somewhere, right? The bottom side of, of this support level, something like 14,000, which is something we spoke about, a few months ago in other videos with, price projections and things of that nature. However, with the idea that the Fed may be pivoting a little bit on rate hikes, Bitcoin's been kind of consolidating for a while, a bit of a pressure cooker, so to speak, and it's broken out. The question is, can we start to reverse this trend? So I've cleared the chart up again. I just want to quickly explain kind of the idea that, okay, we understand that we're in a more of a midterm downtrend, right? As I just explained with the highs and the lower lows and things of that nature, correct? However, one thing that Bitcoin's at least attempting to do at the moment, not on a daily closure so far, but at least on a wick, you had this last high inside the wedge, and this high of 21,000 about 600 that we just put in a few days ago is actually slightly higher. So in the short term, or I guess, dating back at least to November, Bitcoin's trying to reverse trend. And if it were to come back down here and bounce, somewhere down here at this 20,000 level or above that I talked about, and can start pushing up and break this resistance the next go around, well, then you're starting a different trend, right? You had this trend, which is the still will govern the overall bias for maybe long-term traders, because zoomed out on the weekly, for example, we're still in a downtrend. But this could be the first signs that Bitcoin on the daily time frame at least is trying to reverse trend. Next up, I wanted to briefly talk about the DXY on the monthly. Now, this isn't really relevant to the lower time frames. But this is just something that I'm going to talk about more in tomorrow's video, but it's just kind of the idea that we're in a wait and see area, at least in my opinion, and I'll explain why, as far as midterm holds go, because really right now I'm waiting for the right time to start picking up some of my favorite cryptos like Ethereum and Link, Atom. Those are some DOT. So these are coins that I personally plan to pick up and accumulate and hold, mid and potentially long term. But I've been waiting for the right time, and I know we're getting closer and closer to it. The charts are telling me this, but I just wanted to kind of put this on your guys' radar so you can also keep track of it. So here on the monthly chart, I have it online just so it's a little bit cleaner for the DXY. Those of you that are unfamiliar with the DXY, what it is it's just a chart that represents the strength of the US dollar. And the way that it does that is just putting it up against a basket of some of the other major currencies, like the yen, the euro, the pound, and so forth. And generally speaking, especially on time frames like this, if this is going up, it's bad for, stocks, risk on assets, of course, crypto. So you can see that obviously dating back to May, which, if you remember, if you were part of crypto back in May of 2021, there was, a pretty major crash that happened then. This entire move to the upside has been kind of, the inverse of what Bitcoin's been doing, which, and stocks in general, which has been major moves to the downside. Well, we've had this kind of peak on the DXY in September, and we've slowly started to see some stocks and crypto, Bitcoin specifically, kind of rallying since that's been rejected. So all I wanted to put on your radar before we talk about the S&P 500 and end today's video is just that here in the near future, hopefully I'll be talking more about midterm holds, coins that I'll be picking up and accumulating for the future. Things like Chainlink, Atom, DOT, of course Ethereum. I'm a huge fan of VRA, which I'll start doing a video series on, hopefully in the near future. But what that comes down to for me is basically one thing. We need to lose this blue area, this blue zone I have that really has only ever acted as resistance for the most part in the DXY's history. Resistance, 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 right? You got to go clear back, I think, to like I guess the 80s or something where it was actually support. But anyway, it's basically been resistance, but we're approaching it. It is a key level. The question is, are we going to bounce at it, at least maybe in the short term, which on something like the monthly could literally be 4, 5, 6 months, maybe even a year? Or are we going to lose it and potentially head back down here somewhere? This is what we want to see. As soon as we close a monthly candle below this, that will basically spark, it'll start making me very, very, very interested in holding on to some coins, for, maybe 6 months to a year, right? I would expect bigger returns out of, Bitcoin, Ethereum, and of course the good altcoins to follow if we can lose that support. The question is that going to happen? And we don't know that. We won't know that probably for a few months. So most of my videos over the next month or two, or of course, if I'm talking about a coin, it's going to be very short-term trades. And that's why I always recommend, check in the link in the description that I leave for my Telegram group, joining that, because I may mention a trade that I'm in. But if you want to monitor it more closely, you need to probably join the Telegram group. That way you can see when I've gotten out of the coin. Because, for example, I made a few videos recently on Chainlink, and if you haven't been keeping up, that trade's been closed. I've taken profits. I'm not holding on to Chainlink. It wasn't a midterm hold or anything like that. However, as we approach this next potential bull run, which we all would hope would happen sometime in the next 1 to 3 years, a lot of the ideas of those coins that I want to hold are based on the DXY, right? We need to see a major downtrend, which clearly we've been in a major uptrend on it since 2008, of course. But, even if we just get something where it's, you know, in a multi-year short-term downtrend, something like that, these are the times that you want to be in, you know, stocks, crypto, Bitcoin, etc., right? So we're looking for that, and I'll keep you guys posted. I just wanted to kind of put it on your radar in today's video. And then just to finish up, here's a quick update on the SPX, or the S&P 500. This is the daily chart. Now, I would recommend watching the video I made last night to kind of understand what I have here on the chart as far as these average pullbacks and stuff. But in that video, I just kind of explained that this indicator, the stochastic RSI, that each time that it had crossed back below 80 and started trending back down this way, that we had, you know, all these different averages of pullbacks, which kind of gave me areas of interest. But I just want to give a quick update kind of on that, because as of the closure today, the blue line is actually back below 80. The orange one is still barely above, and what we'd want to see is both close below that 80, so we'll have to wait and see what happens tomorrow, and if it doesn't happen tomorrow, we may have to wait until Monday, as traditional stocks are of course closed for the weekend. But we're keeping a close eye on that, because it's going to govern my bias and how I decide to short-term trade the market based on that. Because if it does in fact close below 80, you know, at that point, just playing the odds, you know, a statistic type game, you would expect this to trend down here at some point, which is considered oversold areas. Of course, you'd expect to bounce at that point, but this would govern the idea that I spoke about in yesterday's video as far as some of these lower support areas that we'll be keeping an eye on. Now, right now, there's not much more to say than that, so we'll move on to one more chart to finish today's video. So just remember, as we finish out on the Bitcoin chart, the key areas to look out for is we need to break above and close at least a 4-hour candle above, I would say, about 21,650 to 21,700. At that point, you know, the next target up, I would say, be about 22, of course, psychological number, and then probably most likely something like 22.5. You know, that'd be my short-term targets if, in fact, we break higher. Otherwise, you know, we're looking for a pullback anywhere between 20,000 and 20,000, about 200. A wick lower, we fine with me. A retest of the daily 200, which actually sits at about 19,600, would also be okay with me, as long as we had volume to, you know, to support buying it up. Otherwise, we'll come back tomorrow, give you guys some more updates on kind of, you know, what price action is done and, you know, what new clues we have for the future. And with all that being said, I do appreciate y'all stopping by and watching the video. You guys know what to do if you enjoyed it, and if you don't, I'll go ahead and just tell you real quick. Remember to like and subscribe, and we'll catch you in the next one. It's